Hello, everyone, and welcome back. Today, we will cover the market outlook. I know I've not been covering that since a few weeks because of personal reasons. So, without any delay, let's first get into the analysis of Nifty and then the various sectors. And then I want to take you through one stock of the day where I have come across a very interesting setup developing. So, I want to discuss with you the basis of selecting the stock, the setup, and the qualifiers for making position. So first, let's get started with the chart of Nifty. So you should be able to see my screen now. All right. Now, as I get moving with this, all right, let's start with the market outlook. But before I begin, I just want to give you a reminder that if you wish to know about my stock ideas or my live sessions that are coming up, you should join my Telegram channel, Trade with Kavita. You just need to search this on Telegram. I am also going to share the link with you on the channel on the comments. There you go. All right. Now let's move with Nifty. We've already got the charts open. So first, let's take a look at the broad chart, the weekly time frame, and see what is going on. Now, this is a weekly chart, and we can see right from the trend line. So this is where the trend line support kicked in when Nifty touched this yellow line on 24th of February. And this point onwards, a small bounce back has been witnessed. I know on the daily time frame it looks like a lot, but honestly, it's a pretty small bounce back which just lasted a few weeks. One thing that does concern me on the weekly time frame slightly is the breach of level of 40 here. Now, don't get me wrong, the broad trend on Nifty still continues to remain pretty bullish as seen by this overbought condition very recently in September 24. Again, from weekly perspective, it is pretty recent, right? So this previous high was forged against the overbought. Now, however, the correction has breached the level of 40 slightly, which is not surprising considering this entire bull trend has been one long rally since the bottom of 2020, right? There was a small dip that we witnessed over here, which was the previous major correction that we'd seen in Nifty. So let's quickly measure this major correction over here. This was around 18%. But in this correction also, as you can see, Nifty did retest this high, previous high, took a dip, took support at the 250 EMA, which is the blue line, and then established a bull run. So this is the point. This is the point from which it actually went overbought again and said, okay, I'm in bull run once more. So once it established its bull run, after that, when was a good point to actually get bullish in the market? When it retested its previous low, right? So it retested the high, failed, came back down, established the bull trend, established a higher high above all previous highs, came back, created a double top, and went into rally. So right now, what I'm seeing that the market is definitely in an intermittent correction mode, and when it's going to turn bullish from a technical perspective, we don't have much visibility on that. Now, sure, there is a lot of new development on the political front, on global economics front, in the form of the tariffs, obviously, and it's freaking everyone out because it is an anomaly. This is not usually how the market operates. This is not usually how global politics works, right? So when an anomaly situation happens, things need to be figured out once again. So in this situation, it's always better to be cautious instead of aggressive. So here, from a weekly perspective, the market appears to be in a correctionary zone. If you look at the 250 EMA, which is, in my opinion, the most important EMA, I am noticing that the 250 EMA has been breached and is in fact acting as resistance, right? The previous high, so in my Telegram channel, I had already mentioned that Nifty needs to cross above and sustain 23,900 for us to conclude that a new rally has begun. That is the reason why when Nifty turned from 22,000 and rallied all the way up to 23,900, in my trade together program where I give swing trading recommendations, I did not give a lot of calls. The few calls that I gave did achieve their targets, or we ended up booking pretty handsome profits there. But still, because the market was not still above the level of 23,900, I was not going aggressive in the market. Now, again, we can see that the Nifty has turned down. To assess the more recent price activity, let's go to the daily time frame. So this is the daily time frame here. Yesterday, I added an analyst comment in my Telegram channel, which I'd like to share with you. So I share these analyst comments also on days where I feel something significant has happened and the move move going forward is very obvious. Okay, so here you can see I mentioned that the recent up move on Nifty, which is this up move, it has displayed an ABC corrective bounce rather than a fresh rally. The index also faced rejection at the key resistance, which was 23,900 marked on my chart, forming a failed breakout. The RSI 25 of the daily time frame resisted 60. So that I will move this a little bit to show you. Okay, so this is on the 75-minute time frame. So we'll see that on the 75-minute time frame. And the price slipping below key EMAs, the trend remains bearish. Now, again, like these were the key EMAs, right? The 250 EMA, the 100 EMA. Uh, Actually, the 20 EMA, yesterday the price was still close to 20 EMA. It had just broken below the 20 EMA. So that was a sign of bearishness coming back. So now I expect to retest the level of 22,100 to 21,700 to be, so 21,000, 22,100 is here and 22,700, 21,700 is over here. So I am expecting these levels to get tested. Now 21,700, 22,100 is very close to the previous low, right? So that needs to get tested, and 21,700 is what I am expecting the Nifty to touch if the price continues below the level of the recent low. Now here on the daily time frame, what you will notice is that Nifty went, the RSI 25 period on the daily chart of Nifty went above the level of 60 slightly, correct? However, just prior to that, the dip that occurred, that is this dip, it broke below the level of 30. Okay. So when typically this happens, right? Even if Nifty goes above, or any stock or index, in my observation, in my practice, if it goes above the level of 60, you shouldn't immediately take it as the range shift or bullishness returning. Expect a deep correction after this rally also. Now, if see level of 40 has already been breached, there is a chance that the level of 30 will be better respected. So it makes sense to set an alert on the daily RSI 25 period around the level of 30 on Nifty. So we'll know. Okay, this is the 75-minute time frame. Sorry, my bad. I did not realize that the chart was on 75 minutes. Anyways, so just to reiterate the point, what this label actually says is the level of 60 got rejected, right? So that happened on the daily time frame, which establishes that we are still in the bear range. Now, because of this move, I was able to predict yesterday itself that the market is expected to continue downwards, and we saw a pretty big downward move. I think we have a little more correction, unfortunately, left in the market. Now, the 75-minute time frame is where we saw a temporary shift into the bullish range, where we breached above the level of 60 and stayed there for a while until we got resisted by the key resistance, until we got rejection from the key resistance of 23,900. Now, Here, when the level of 60 gets retested, we'll see how this goes. But if you look at the volume also, right, the volume pickup on most stocks in this rally has been pretty poor, uh, giving us the indication that the rally is not very, very reliable. All right, so we have a comment from Prajwal on YouTube where he's saying that the Nifty has fallen 300 points. Uh, so, Prajwal, I think that might be causing a little bit of panic in your psyche. Okay, what I will suggest is that you stick to analysis of the Nifty chart. The Gift Nifty is not a very good. Uh, the gift nifty is not a very good indication of what nifty might actually do, because if you saw the opening chart of gift nifty yesterday, gift nifty was down significantly, but nifty did not really give a strong correction yesterday. It is today that nifty actually fell significantly, right? So that's that. Now, so my analysis of nifty, to cap it now, suggests that we are expecting a correction. The first support is 22,700. We are expecting the correction to continue. The first support is 22,700. The next support is 22,100. Right. Let's now move on to the indices intermarket. The intersector indices chart. So this is the intersector index chart, and let's study this from the point of this reversal, that is Tuesday 25th of March. So that is around this point, because this is where the broad market peaked out, right? So lots of haywire activity. We can see that all the sectors did not pretty much deliver. I would say a uh, fanning out kind of happened sometime on Friday. So let's move this back to assess better from Friday onwards. From Friday's closing, okay, superbly lot of volatility across all sectors has been noted so far. And so these two green lines, these are actually the pharma and the healthcare sector, which, by the way, are expected to do better relative to the broad market, because no tariffs have been levied on the tariff on the pharma sector for now. So we do expect them to do slightly better. In fact, yesterday we did see positive activity across most pharma stocks, but today they were not able to hold up against broad selling in the entire market, right? CNX IT is naturally getting butchered, because whenever negative news comes in from the US, CNX, the IT sector gets trashed. And based on the charts of the IT sector, I think this thrashing can continue for a little bit longer. So don't be very aggressive in accumulating IT stocks just yet. I would suggest you wait for confirmation of reversal, right? Not just the bottom, confirmation of a bullish reversal. Only buy stocks in the market if you are going to do individual stock buying. If you want to buy mutual funds, it's a very good time, because Nifty's already fallen 16%. It's a good time to start an SIP or even make a lump sum investment. I would suggest doing SIPs better. But if you are going to do individual stock picking, then it's a little bit too early to invest in stocks for long term. I would suggest you wait for confirmation of a bullish reversal, because it's always better to buy stocks when you see an outright bullish confirmation, not a sort of bullishness or probable end of the bearishness, because a lot of time can be spent between the two. If you want to be on the good side of momentum, always go for absolute bullishness. Okay. When you consciously think about that, it's a whole different thing. Moving on, the realty sector. Now, honestly, I think the Indian realty sector has a lot of potential, but personally, I am waiting for, again, higher high to be established. The underlying daily charts continue to look bullish, but we are definitely in an intermittent correction, and it's definitely better to wait for the beginning of a bull run, establishment of higher high, wait for 75-minute RSI to establish a positive range shift by going above the level of 60 and taking support at the level of 40. So once a bull run has been established, then wait for the pullback to make your entries. That way your capital will thank you and your portfolio will perform better. Pharma service, healthcare. FMCG sector is looking good. In fact, if I may mention a stock which has caught my eye in the FMCG sector, I would say it's Kolpal. Again, it's not a recommendation. I'm just sharing my own analysis. But now let's move on to the stock of the day. So I want to discuss the stock of Amber with you. And why I want to discuss the stock is right here. So if you look at the chart of Amber, the weekly chart of Amber, you will see that the volume on the upside has been very strong. All right. This volume pickup we've been seeing since September 24. That is when the market peaked out. So since the market peaked out, relatively, Amber established a new lifetime high by breaking above this resistance here, right? And it did so with very high volumes, and it has been going up higher and higher since then. Correct. Now here Amber also gave a correction, right? However, in this correction, if you see, there also has been pretty good high volume activity. The stock has already bounced back from this point, which is the 250 EMA retest. All right, so it looks like some juice is still left in the stock. Now the stock has given a B C correction, and I think it has started a fresh rally from this point onwards, right? Now, I'm also noticing here that the volume is not picking up on this upside. So let's take a closer look on that on the daily time frame. So on the daily time frame, what is very evident is the stock took support at the level of 40, which is again the support level for a correction within a bull trend. Okay. Before that, when the high was forged, it was very well in the overbought zone, which was again super positive. Now, this correction unfolded against this rally from, I would say, this point onwards. Okay. So this first leg of rally has been corrected, and it looks like it's establishing a second leg of rally. Now, for me, I would expect, since this 1, 2, 3, 4, 5 pattern has been established, let's use the brush. 1, 2. So this is the, sorry, I went a little beyond. So 1, 2, 3, 4, 5. Okay, so this is the impulse wave, and now a correction within a correction of this impulse wave has started, right? So I am looking out for this level. If this is breached, then I would say that, the view has been invalidated, or my Elliott wave count has been invalidated, because this correction um, should take strong support around this level because of the previous high and the 100 EMA roughly lying around here. Okay, so when this support gets achieved, so I'm going to set this stop loss around here. When the support gets achieved, I will look out to make a position in this stock. Now the entry point is not fixed, because for actually making the entry, or for actually committing the capital, I am going to need a higher high confirmation, a bullish confirmation on the 75-minute time frame. So Anmol, the stock's name is Amber, which, okay, you can't see it on my screen, right? Let me just move this a little bit. There, you'll be able to see this now. So it's Amber. Okay, so going down to the 75-minute time frame. Now on the 75-minute time frame, again, what is very evident is that the RSI went overbought, and the volume pickup up to this point, as per the 75-minute time frame, was pretty good. Remember, the weekly time frame did not show a lot of volume pickup, but the 75-minute time frame is showing volume pickup from a short-term perspective. And because we are interested in short-term analysis for this, or short-term trade for this, I I want a confirmation on the 75-minute time frame while ensuring that the weekly and the daily time frame are directionally agreed. Okay, there should not be a major red flag on the higher time frames. So, um, here again, the first support has been breached. So now the potential range for the second support is this entire zone from 6200 to 6500 now. So I am going to move this trigger a little bit lower to 6300, so kind of in the middle of the support zone that we just discussed for the stock. And I am going to keep this potential stop loss at 6100. So what I want is, I have set this alert already, pull back to previous high. When this gets triggered, I will also activate the alert on the red line, which is the potential, which is the zone, or which is the level at which this setup will get invalidated. Remember, I am not yet committing capital to the stock. When this gets triggered, then I will move this higher high alert, which is currently set around the level of 6800. I will move this back to 6600. So when this gets triggered, then I want to make a position for a potential target of 7800. And I will only make that entry if, when I get the confirmation, the risk reward ratio is more than 3. Now, it's not necessary that the confirmation is going to come around 6600. Based on how the stock chart behaves here, it might just give some consolidation, in which case my confirmation might come in at this level also, 6400, and say it has gone to 6200 without really triggering the invalidation alert. In that case, if I enter here versus here, my risk reward ratio will be around 4.8. As you can see, I have drawn using the long position tool on trading view. If I make a position over here, or if I get a confirmation over here, I will not be going ahead with a long position because the risk reward ratio does not qualify. The risk reward ratio will be 2.3, right? However, I might move my stop loss up here on the recent low, in which case the stop loss would qualify. So because there are too many ifs and buts, I will keep this stock as a part of my monitoring list, not something that I will make a immediate long position in. Okay, so that's the discussion for now, and this is what I wanted to also show you. Just basically, how I assess a stock, how I create the different scenarios, how I determine my target and my stop loss. So I told you how I determine the stop loss. I forgot to tell you how I determined the target. So let's go back to the chart and take a look at that. So weekly time frame. So the target was actually determined on the basis of the weekly time frame. I basically chose this point because it has the most number of interactions. It forms the high of this candle. It goes through this doji's body. It goes through the upper wick of this candle and the upper wick of this candle. So I think this is a good resistance zone. That is why I have chosen this as a target for this potential trade setup. So on YouTube, we can see a comment from Satvik. Previous rally could be wave one. So many stocks in some sectors like PSC, PSU banks look bottom is done. Satvik, it is possible, but none of them, in my personal opinion, have yet given a confirmation. So don't jump in just yet. Okay. All right. So I can see there are some members who've also posted queries, stock queries on Mr. Dharmender has pretty much shared his entire watch list or his entire holdings. So that's not how this works. But because we are out of time today, what I would suggest or request you to do is you join my Telegram channel. And from next week onwards, when I come live, I will first be posting the YouTube link on my Telegram channel so people in my community can join the sessions as well. I will be posting the I will be posting the link to this session's YouTube video, where the charts, by the way, are more visible on the Telegram channel. So you can search it there. And if you haven't caught on with my Telegram channel, just to show it to you again, this is the Telegram channel. It's called Trade with Kavita. It's called Trade with Kavita. All you need to do is hop over to Telegram and search this in your Telegram. Just be a little mindful. There are some fake channels running with slight differences in spelling. So I will paste it in the comments so that you don't get lost. And that's pretty much it for today's session. Thank you so much for joining in. I will see you again tentatively on Monday. Again, I'm not committing to doing the live sessions regularly every Monday, Wednesday, and Friday like I used to because of personal circumstances. My daughter is just 4 months old, and she's obviously my first priority. But I intend to do this as regularly as I possibly can. So watch out for the live sessions on Mondays, Wednesdays, and Fridays at 5:30 p.m. India time. Okay. Thank you so much for joining in today's session. I will see you again on Monday.